Hello, welcome back. As a continuation from the last video on my investing approach, today I will explain using Dyna-Mac, Polo Marine and Beng Kuang Marine. I've been doing a few videos on them. They've been doing well, especially Dyna-Mac warrants. How did I find them? Those interested in the oil and gas sector can also use the opportunity to understand my approach in this video. The usual disclaimer. Let's review what happened previously. Here's the oil chart. Oil price hit a high in 2008. It fell during the GFC but managed to climb up and maintain the $100 range before crashing to a low of 37 in 2016. A series of factors caused the sharp volatility. This affects all SGX oil and gas companies badly. Ezion, Imas Offshore, Isra, Triad, and Swiber. They are all gone. Shareholders suffer losses with this and other oil and gas companies as well. Here are the survivors. Notice during the good times and when oil prices are at high, they have rising revenue, but more debts and poor cash flow. So when the oil price crashed, all are affected. Many did not survive. Some survived but are not doing well. During the oil rally, the companies and investors were euphoric, believing that the good time would last and the oil price would remain high. As the oil and gas sector collapsed, many investors were hit with huge losses. Many become disinterested and shunned the sector. Is the sector no longer investable? I first saw Dyna-Mac and noticed signs of turning around, and I decided to examine further. Hence, I examined as many companies as possible to compare. I set a tight criteria: growing revenue, growing profit, growing free cash flow, and a growing cash position. It should also be cheap. Growing free cash flow and growing cash position are my two very important criteria, as these two killed many previously. Many did not meet the criteria. Dyna-Mac and Polo Marine are more obvious and their valuation were quite low then. Beng Kuang is a third, so I zoom in further with my duty. Here are the annual results as shown previously. I zoom into their half-yearly and quarterly results where available. There are signs of turnaround. For Dyna-Mac, the new CEO seems to be the reason for the change in fortune. The company is showing good results and the company is doing all the right things to be a more sustainable performer. For Polo Marine, the crash was a near-death experience. They know they have no third chance, they have to do well. It has been growing very well with its offshore wind business, which is contributing quite significantly to the total revenue. For Beng Kuang, they need to exit their SGX Watchlist. There's a change of CEO, they have been strengthening their balance sheet, its infrastructure and engineering business is growing very well. I did not expect to end up with three companies. I would rank Dyna-Mac and Polo Marine higher and Beng Kuang as a more risky bet. The market is gradually recognizing their potential. Despite their small caps, more analysts are covering Dyna-Mac and Polo Marine and giving them a good target price. Let's have a quick update on how we see from here. Dyna-Mac share price is 36 cents. This gives a PE of 14.4 times. It has been going up since the release of the result and is now closer to the target price of 42 cents, an upside of 16%. Share price has recovered a lot. Shareholders should be happy to have achieved such recovery. It broke the 2014 resistance at 31 cents. It's currently at another resistance. Share price should be able to break up, a question of when. It does not provide quarterly updates, so no Q1 update. One less information to look forward to and get excited about. There's an AGM in April, a good opportunity for investors to get to know the company better. Contract win announcement will be potential catalyst. The warrant provides a better upside than its shares. It is up 144% since its listing in January this year. So, the 42 cents target for the shares means a target price of 27 cents for the warrants. This is an upside of 36%. The warrant provides a better upside for the investor and trader to be interested in Dyna-Mac. Polo share price is 5.9 cents and the PE is 11.9 times. Compared to Dyna-Mac, Polo share price has a better upside to the analyst target price. Similar to Dyna-Mac, it has recovered a lot. It's currently trading at a major resistance, 5.9 cents before its suspension and capital injection in 2017. Hope Q2 and first half result has something to be excited about. Beng Kuang Marine has a much smaller market cap of 16 million. Notice it has a much higher volume recently. The market has taken notice of the stock. Tencent is a major resistance formed since 2016. The coming AGM will be a good platform for them to explain their plan to exit the SGX watchlist. The Q1 update has to show their continued momentum. In summary, after the last boom and crash, many investors are not interested in the oil and gas stocks. However, there are signs of bottoming and some are turning around. Examine as many companies as possible to understand how they are turning around and find the best. It helps to build confidence that what we find is the best. Some are destroyed by the crash, some are surviving, and some are beginning to show good performance. Find the best. Do keep validating. So, are there any more good oil and gas company to buy? Based on my investing criteria, it's not very clear. We'll keep tracking. Just right with what I have, I'm mindful not to loosen my investing criteria. Do not over allocate a sector to the portfolio. That's all I have for today. Hope you find it useful. Do give a like and subscribe to the channel. Thank you.